Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are but 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Katie Greifeld, counting you down to the closing bell. Here to take us beyond that bell with a global simulcast. Massar, Tim Stenovec, bringing together our Bloomberg TV, radio, and YouTube audiences worldwide. We're going to pass through some of the most crucial moments of the trading day. And we think about the crucial moments being, well, a flick into the green, a volume light, but a 0.1% glimmer of hope on the S&P.
Yeah, Caroline, it was just interesting. Just like 30 seconds ago, 5 seconds ago, we were all in the green, but now we've seen the Dow go back into negative territory. It's been that kind of day, Tim, where we're just up and down an awful lot.
All right, I'm going to take a step back here and reference some comments that Alan Zafran, the founding partner and co-CEO at IEQ Capital, who we just had on our air, mentioned to us. She said the stock market with this rally is essentially telling us there either won't be a recession or the recession will be so shallow that you won't see an earnings recession. And he said that the likelihood of the Fed actually getting it right, i.e. threading the needle, he thinks it's much more likely now than it was a month ago. He thinks they could get it right.
Dare I say it, we just had Christina Hooper here of Invesco also hinting at sort of a soft-ish landing. And Katie really talking about maybe the lack of spread widening, that the high yield market is also sort of further signaling that corporate balance sheets are strong. There's sort of a real cliff that we're approaching anytime soon on the horizon. Borrowing costs have been locked in. And so at least from that sort of cash flow perspective, things too also look good.
Interesting to couch that against what we're actually hearing from Fed officials. I'm thinking about Kashkari just today saying it's unclear if the Fed is going to be able to get a grip on inflation without tipping us into a recession. So a lot of optimism on the market, not so much among Fed officials.
They're really trying to talk. Well, keep out there, keep telling us there's more wood to chop, there's still more places to go. We need to stick on this narrative that inflation is our focus. For now, our focus is the S&P 500 ending the day up 10 points, up 0.25%. We managed to get that lift just into the final seconds of trade, and 4,284 is where we closed. The Nasdaq closing up 0.2%, 12,965. That's 27 points higher. And Carol, we managed it with the Dow. We just scraped into the green, up just 20 points, but a round number of 34,000 on the nose. Russell 2000 is also higher, but a smidge. But overall, this is a market that really clawed its way back up.
Yeah, certainly on those major broader equity averages. I'm going to sound like a little bit like a broken record because I'm going to go back to the semiconductor names because that's where you continue to see some outperformance really all day today. The stock's ending up about 2.3%, Taylor.
You see some outperformance in terms of the individual sector levels. There's a little bit of green even in some of the, quote, worst performers. So a little bit of an advance here when you think about the majority of sectors here that actually were in the green. You get energy, of course, continuing to be a big outperformer, up 2.5%. Some of the semiconductor equipment, also Qualcomm, certainly, Carol, one that you've been talking a lot about today, up 2% or so on the day. Down to the bottom, things are looking a little bit less interesting. We've talked a lot about banks and real estate as sort of the big sort of yield drivers that are under pressure today. Pharma, telecoms as well. The worst performer, though, still off less than 1%.
All right, so let's get to some of the individual gainers in today's session that was kind of all over the place. Certainly a standout. You know, I've talked a lot about semiconductors. Taylor was mentioning as well on semiconductor, topping the S&P 500 today, hitting another record high, up about 7.3% by the closing bell. Remember, earlier in this week, the company reported second quarter net sales that beat the average analyst estimates, upped again its outlook for net sales and adjusted EBITDA for full year 2022. It is up around 10% so far this year. Cisco, we were all over it yesterday after the closing bell when it reported its quarterly update. It, too, was top of the S&P 500, NASDAQ 100. It had a bullish forecast for quarterly sales, saying chip supply shortages are easing and it is able to fill more orders. So that stock up just shy of 6% in today's trade. And then I'm going to go to the retail sector. This has been a big, major theme all week. BJ's Wholesale Club, this stock up 12% at its highs today, finishing the day with about a 7.2% gain. This, as analysts tout the Warehouse Club operators' adjusted EPS as stronger than anticipated. They kind of did brush off the company's margin pressure, but that was kind of expected, they said. They also did raise the company, that is, their fiscal year 2022 guidance. And they do say, Tim, that their expansion plans remain on track. The stock hitting a record high today.
All right. You got the gainers. I got the decliners, Carol. We got to start with Kohl's. Kohl's shares finishing the day down by 7.7%. The company slashing its guidance for the year, including adjusted EPS, operating margin, and net sales growth. Bed Bath & Beyond having its worst day since June, finishing the day down by 19.6%. This after RC Ventures, Ryan Cohen's firm, said in a filing that he may sell as many as 7.8 million shares along with some call options. You remember he took that stake back in March, nearly 10% stake in Bed Bath & Beyond. And then Verizon shares finished the day down by 2.5%. This after MoffettNathanson cut the recommendation on Verizon Communications to underperform from market perform. This as T-Mobile continues to widen its competitive advantage when it comes to 5G. And then you have AT&T undercutting Verizon with aggressive promotions. Craig Moffett lowering that price target to $41 from $55 per share.
There's names have been beaten up of late when we start to think about a consumer that pulls back. We've got so many earnings to get through in a moment, so I will make this brief. Commodities go higher with oil, with WTI, with Brent. We push on higher as there's more bullish sentiment in the oil market at the moment. Even as on the FX side of things, guys, we see a dollar strength, 0.6% higher on the Bloomberg Dollar Index. We see a weakening in the British pound, a weakening in the euro, a weakening across Europe, across the other key G10 currencies, more hawkish Federal Reserve comments. Maybe that helps the dollar go higher. And in sovereign bonds, really mixed picture. It looks as though it was money coming out of bonds today, certainly in Asia and Japan and New Zealand, Taylor.
You see yields, of course, here, Caroline, a similar story. Yields are down here, particularly on the 2 end. You're down 8 basis points or so on the day. Price higher, yield lower. It gets less dramatic the further you go out on the curve, anywhere from about 2 to 3 basis points or so. A lot of the movement, again, in the front end. I want to pivot and talk about a lot of the movement within the equity markets again. We're getting reports again from Ross Stores. Second quarter actually looks okay. The comp sales were down 7%. Estimates were for a decline of 6%. But the second quarter operating margin was better than expected at 11.3%. And second quarter EPS was also better than expected, $1.11 versus estimates of $1.01. Unfortunately, though, it's that forward guidance that doesn't set us up well. Third quarter earnings per share looking at 72 to 83 cents. Previous estimates had been for over $1. And again, then that full year EPS, big decline here relative to consensus, as low as $3.84, whereas the previous estimate, the Midtown range, had been about a $4.36. It's further these inflationary pressures, Katie, that are underway.
Absolutely. We heard that from the CEO, who said we're disappointed with our sales results impacted by mounting inflationary pressures. And of course, it's that outlook, as you can see, weighing on shares right now. It does not matter that maybe they skirted past in the past quarter.
Let's get on to the chips world. Manufacturing, marketing, servicing of semiconductor wafer fabrication. I'm talking about One Applied Materials. We are looking at a set of numbers coming out that see a third quarter adjusted earnings per share beat estimates overall. If you're looking at what have been sales coming in at $6.5 billion. And overall, this is a company that actually sounds longer term confident. They say there is long-term strength in the semiconductor market and are outsized growth opportunities. However, the CEO is saying they delivered. Despite record quarterly revenue, they still have supply chain challenges constraining their ability to meet demand. As I say, adjusted earnings per share beating, they're coming at $1.94, and that was well ahead, but only slightly ahead of last year, but well ahead of estimates. We see net sales climbing 5% year on year to $6.5 billion, Carol.
Yeah, AMAT, so up almost 2% in the aftermarket. It was higher in the regular trade. I mean, why do we care? I mean, we've been watching the semiconductor industry, and, you know, we just talked to our Ian King talking about kind of the ebbs and flows of this industry, and you tend to see, you know, lower supply, then a lot of investment, then the supply goes up and you have a glut. So this is why you have kind of a roller coaster in terms of some of the cycles. But why do we care? This tells us about kind of demand overall. I mean, this is a company whose customers include Taiwan Semi, Samsung Electronics, Intel, Micron. I mean, this is a very key name when it comes to the semi industry overall.
But we are not yet seeing a glut, and that's still a concern because of inflationary pressure. I mean, if you think about how many Americans are unable to buy vehicles and the way that the price of vehicles has gone up, partly due to the fact that they are so hard to get as a result of chip shortages. So as Ian King told us earlier today, when I asked him if it means we're going to start to see more cars on lots, he said that remains to be seen. I mean, look what we saw from Cisco yesterday, for example. Demand is strong.
Demand is strong. It's an interesting time, therefore, to be changing up the guard from a governance perspective. I always think it's important to think about governance because it is part of the ESG that we overlook in large part. A lot of that comes down to the role of the boards. Home Depot, of course, came out and beat expectations earlier this week. They've had a changing of the guard a little bit in terms of some executive roles, but they're also naming that they will have a new overall chairman of the board. This is seeing that Edward Ted Decker as chair of the board. He's currently on the board of directors. He's been elected CEO, president, and as as chair of the board effective October the 1st. He will succeed Craig Menier, who is, of course, retiring as the chief executive September 30th.
Another guy, Caroline. I'm just going to put that out there. You talked about ESG and governance. All right, certainly a bunch of news after the close. We will continue to cover all of this into the Friday trade. That's a wrap, everybody. Our cross-platform coverage on radio, TV, and YouTube. We call it Beyond the Bell. We will see you same time, same place tomorrow.